Pricing has improved as much as 1% on your loan. Hey, it's Kevin Amos, Pine Financial Group. We work together so you succeed. You found us here on Facebook, you found us here on YouTube. Please hit like, hit subscribe. We're trying to build a channel here to help more real estate investors just like you. Hey, I got some fantastic news for you this Friday, this awesome Friday. Last week, in fact, let me just read this opening paragraph to you. This came out last Tuesday, actually. It says the Federal Housing Finance Agency, FHFA, and the US Department of Treasury have backtracked on the recent provisions added to the Preferred Stock Purchase Agreements, PSPAs, to both Fannie Mae and Freddie Mac. So in those agreements, this happened back in January, in those agreements, this is when they said, hey, GSEs, Fannie Mae and Freddie Mac, we don't want you to do any more or a very limited number of investor loans or second homes. We really want you to focus on the owner-occupied borrower. So what they did was they made restrictions a little bit tougher, and then they limited or capped the amount of second homes and real estate investment loans that Fannie Mae and Freddie Mac could buy or purchase. So that really impacted us real estate investors and our funding. It did two things really. It made it a little bit harder to qualify because the guidelines were tougher, and it made it more expensive so that they could limit the number of loans they're pushing out there. So I was talking to Joe Massey, he's a preferred lender here in Colorado. So if you're in Colorado and you're looking for a fantastic mortgage lender, Joe Massey is the guy. So I asked him about this. What will this do, these restrictions, now that they're being lifted as of last week, what is that going to do for real estate investors? And the answer was real short and simple. Hey, look, pricing has improved as much as 1% on your loan. So if you were looking at a loan for, let's say it's 4.5% or 5%, well, now you're looking at 3.5% or 4% for that exact same loan. And I'm bringing this up, obviously that's fantastic news for real estate investors, but if you were looking at a loan a couple of weeks ago, as recently as just a couple of weeks ago, and either you didn't qualify because of some nuance in the underwriting, or it didn't improve your pricing enough to make sense to pull that cash out or lower your interest rate on your current investment property loans, well, now is the time to call your lender and ask them to relook at that loan to see if there's any way they can get that done for you for the pricing you were hoping for. So right now may be a time to refinance. I'll leave Joe Massey's information down below. For those of you that don't know, Pine Financial Group does not do that type of lending. We don't do any Fannie Mae or any conventional FHA, VA, none of that. All we do is short-term bridge and rehab lending for real estate investors. So if you need a referral for other types of loans, happy to help you with that. But again, this is fantastic news, came out last week if you haven't heard. If there's any needs that you have, financing needs for your real estate investment projects, let us know. We'd love to help you. You could check us out at pinefinancialgroup.com.